Everywhere you turn, people are talking about emerging markets. They say things like, are emerging markets gonna outperform US stocks? So today we're gonna shed some light on emerging markets. We're gonna figure out what they are and will they actually emerge? And it's all gonna go down on this episode of Real Vision's The One Thing. What's going on, investors? AK here. The term emerging markets was actually introduced in 1981 by a guy named Antoine van Atmel. He worked at the IFC, which is part of the World Bank. So Antoine originally pitched the fund that invested in countries like Brazil, India, and South Korea as the World Fund. He presented this idea at a Salomon Brothers event with a bunch of fund managers, and they loved it. But they hated the name. So it was renamed to the Emerging Market Fund, which is much easier to sell than what Donald Trump once called it, the Third World Shithole Fund. And so emerging markets were born with a phrase that had so much hope and positivity that you would hope they would emerge eventually, right? Well, here we are in 2019, 38 years later, and most investors have some sort of exposure to emerging markets in their portfolio. Emerging markets almost act like the technology sector. They add a high risk, high growth area into your portfolio. One of the most popular funds that you may know is EEM, which is the iShares Emerging Markets Fund. And EEM is made up of a bunch of large cap companies from emerging markets like China, Korea, and Brazil. But what are you actually buying when you're buying EEM? Well, Christian Fromhertz, the CEO of Tribeca Trade Group, came on Real Vision recently to discuss what's inside EEM.
What I want to talk about is the components of EEM, the countries as well as the individual names that are in the EEM ETF. I think that's always important. Just when we're looking at a US ETF or a sector ETF, we don't want to just look at what the sector is, but we want to know what companies make up the sector, because ultimately that's what's going to drive the performance. Okay, so top geographic countries. If you could see, it's a little bit weighted. It's got a higher weighting to China. You could see South Korea, Taiwan, India, Brazil. These all make up over 5% of the ETF. So it's a little bit weighted to China. But if you take a look at what is going on within some of the groups, and you could see Tencent is the #1 holding, BABA is another large cap holding, Taiwan Semi, so that's EWT from the Taiwan ETF. You could see that some of these companies you're familiar with.
So as you can see, when you're buying EEM, you're mostly betting on Chinese companies and mostly Chinese tech companies at this point. And Tommy Thornton, a Real Vision regular and think tank contributor, is pretty comfortable with that.
The biggest weights in the EEM primarily are financials and technology. And the countries that are dominant are mostly Asian, China, Hong Kong, Taiwan, and Korea. And there's others out there, but it really drops off with percentages. But that's about 50% right there. The biggest weight as far as a stock component is Tencent. And Tencent is a video game maker. It's one of the largest companies in the world. And it was down 47% from its peak to bottom in the last year, which is just astounding when you think about it.
But how have emerging markets performed compared to the S&P recently? Over the last 5 years, even counting last year's market sell-off, the SPY's total return with dividends is near 50%, while EEM is only at 3.5%. And that's really something you got to consider when the last 5 years have been the most bullish for markets. Well, except for last year. It's important to understand that when you're investing in emerging markets, not only are you investing in those companies, but there's also currency risk involved. When you buy EEM, the local fund manager goes out and buys these companies in that country's currency. And when you sell EEM, they sell Tencent in Hong Kong and get Hong Kong dollars. There's also political risks that come with investing in those countries. Just think about Brazil, which is an emerging market heavyweight. They've been beaten down over the years because of their political problems. But ever since President Bolsonaro promised to make Brazil great again, the stock market has been on fire. And I mean, yeah, there's political risk in these emerging markets, but there's also political risk in markets that have supposedly already emerged, like the US, maybe the Eurozone. In short, emerging markets are another example of why you should do your own homework before you start investing. There's a lot of moving parts, but if you could get it right, long or short, you're gonna get paid. And if you want help with that research, then make sure you subscribe to Real Vision. I'll talk to you next week.